Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we did see a bit of a pause after that strong day that we had on Friday. Declines for the major indexes, with the exception of small caps, the Russell 2000. But Justin, what are your thoughts on how today unfolded?
Well, we'll certainly talk a little bit about the indexes and a few stocks. Want to kind of take a look at some of the industry groups that are on my radar right now. So we'll start with Pure Storage in the tech area. Also look at Raymond James Financial and the financials. A lot of those investment banks and brokers looking like they're setting up. And then we'll finish with an insurance stock and see what's going on with Arch Capital.
Yeah, we will get to those three names, but first let's take a look at the major indexes today. The S&P 500 down 0.75%. That's what I have up on the chart here. We also had the Nasdaq, the hardest hit today. Tech stocks, the Nasdaq down 1%. The Dow off by 0.4%, and the Russell 2000 looking like it's going to eke out a gain, a slight gain headed into the close, up about 0.1% here. So, Justin, should we be concerned by declines here today by the major indexes? Because usually when we talk about having the kind of strength that we had on Friday, one school of thought would say, well, you would want that strength to continue. But on the other hand, we've seen such a strong move off of the lows. Seems like maybe we could use a bit of a rest here.
That's kind of the way I'm looking at it right now, is because we moved up so strongly. We had that follow through day. And remember, I mean, this all started with a very strong reversal right after that hotter than expected CPI report. And so when you consider how far we've come, taking a little bit of a break, that's very normal. And it's not like this market is going straight up. I mean, it's kind of coming in fits and starts. Of course, that also depends on what index you're looking at.
Right.
Not all indexes are created equal in this market. I mean, you look at the Dow Jones Industrial Average, and that index just seems like it's screaming higher and not stopping, whereas the Nasdaq has been lagging a little bit more. And the Russell 2000, we often look at IWM, which is the iShares Russell 2000 ETF. That's been holding its own. You've got the S&P 500, the Dow Jones Industrial Average, and the Russell 2000 all above their 50-day moving average lines.
Right.
The Nasdaq still has some room to go there.
Mm-hmm.
It's still kind of hovering around its 21-day line, trying to make a decision if it can keep above that.
Yeah.
But meanwhile, that Dow Jones Industrial Average, I mean, that's up above its 200-day. So there's definitely different levels of strength, and I think that just kind of goes to speak to this being a little bit of a stock pickers market. This is not a market where everything is going up. You've got some of the mega caps that are still struggling. You've got an earnings season that seems very hit or miss. And when I say hit or miss, we're talking 20% gains
big
or losses.
hits and big misses.
Right. And look, we've got the Fed coming up, and while I think everyone's expecting that 75 basis points to happen on Wednesday, that report's going to come, or that the
Decision.
announcement's going to come out on 11 a.m. Pacific time, 2 p.m. Eastern time on Wednesday. I think everyone's expecting a certain thing, but there's always, what does Jerome Powell say in that press conference?
One word. Well, as you say, he could cough wrong. No.
Cough wrong, exactly, or just scratch his nose at the wrong spot. People take on, and a lot of times what happens is the algorithms, will take any little piece of the headline sometimes and have a big reaction based on that. Then there's a counter reaction. So I think that there's reason to still be cautious here, not get too aggressive. But to me, sideways action is actually pretty good right now.
And I mean, we are above the 50-day on the S&P, so that's great. We're still holding above that level. Let's also talk about other levels that you're watching, Justin. I mean, Friday's high, that seems like a significant area that you talked about on IBD Live this morning.
Yeah, because I mean, it just so happens, and this happens a lot of times, where you look at that Friday high, and if you kind of just draw a line straight to the left, you look at some areas that this is hitting. I mean, this is kind of, in the mid-September area, you kind of hit that same level. You kind of bounced at that level on September 6th before you had that quick 4-day rally. If you go a little bit further back, this is where it was kind of running into trouble back in June, before it really took off in July. This is around when the follow through day happened, around June 24th. And then, if you go even further back, we're talking about, all the way back to kind of the May and April lows that were happening there. So this seems to be an important level. We're right above that 50-day moving average line, hitting a level that has been resistance in the past and support. We saw that support happen on September 6th. So a lot of times you do see this kind of being a critical area when it's hitting so many different areas on the resistance and support side. Beyond that, I think our next level, is right there at that 200-day line. And here again, if you draw a line straight across, it's funny how that kind of hits that little shelf that we had around 41.7751. That high that's marked there. Also, the high that was in the early September at 41.19, and this goes all the way back to 41.14, the February 24th low. So these are the two levels I think that are going to be the next hurdles. We'll see how we do,
and that's if we continue going up.
Yeah, I mean, look, I'm all for a market that goes up. I mean, that's great. But what I'd actually like to see, because this last couple of weeks has been a little frustrating, because a lot of the stocks that I've been looking at, they've had
couple categories, right?
Yeah, they've had earnings around the corner. So okay, I'm not going to do anything with earnings coming up in the next day, or they got really extended. There was a lack of volume. So I think if we go sideways a little bit in the indexes, go sideways a little bit in some of these stocks, that'll give them a chance to kind of finish building out some of these handles, or some of the stocks that have already popped up. Maybe they build like a 3 weeks tight, or even another flat pace if we get like 5 weeks here. So that wouldn't necessarily be a bad thing. So taking a little pause, giving these stocks a chance to kind of consolidate the gains that they've had recently, could lead to further gains, and maybe even some rotation out of some of these more defensive areas back into some of the names that we like to play more, the growthier names.
Yes, which we're starting to see maybe some bottoming bases and things like that. We'll have to see if we can get even more setups. And of course, something else perhaps impacting the action today is that we did see the 10-year yield heading back up, as well as the dollar. Justin, last I checked, UUP up about 0.8%. 0TNX on MarketSmith, which tracks the 10-year yield, up back above that 4% level for a second up day.
And I don't think it's any coincidence here that, as we saw the 10-year Treasury pull back last week, that's when we were also seeing the market act stronger, right? So, here we are kind of bouncing a little bit. I mean, Friday was a little unusual in that we had the 10-year Treasury up, but the market was up even more. But still, I think, you still have to look at that correlation, or I guess negative correlation, between the yields and the market. And right now, as those yields go up, that does put pressure on the market, and specifically those growth names that we, again, like to play in that sandbox. But right now, they are a little bit under pressure with the 10-year Treasury acting the way it is. And, look, I think it's old news, but, the inverted yield curve is still one of those things that is a little frightening to people. The 2-year Treasury is certainly been much, much stronger than the 10-year, and a lot of times has moved in a bigger way than the 10-year. So that's worth watching as well.
All right. Well, eyes now looking ahead to Wednesday. We'll have to see what the reaction is going to be like there. Let's also take a look at the sector action today. So here's the IGV Tech Software ETF, down about 0.5%, hitting some resistance right around that 50-day line. So you have, big names in here like, your Microsofts. What else is in here, Justin?
Yeah, I mean, this is iShares software, tech software, and software is still struggling, right? This hasn't been an area that has seen relative strength. That's where we really like to focus. So when you see something that is making new lows as the market was making new lows just recently at that 235.41 level, it just kind of this is going more in line with what the Nasdaq is doing.
Mm-hmm.
And so right now, I think, while software may come back, and a lot of times, look, the things that are hit the hardest come back the strongest, they bounce up the most. But right now, I think where a lot of our attention should be is where the relative strength is. And right now, it's still not appearing in
Mm-hmm.
IGV. Same thing if we look at SMH.
Right.
A lot of the chips, are still seeing, and especially in this earnings season, we're
Mm-hmm.
still seeing some struggles. And so I don't think the chips are out of the woods yet. There are some areas of chips that are looking stronger, specifically ones that had kind of like the EV exposure. There's just like these little pockets of strength here and there. But if you look at the group as a whole, and certainly if you look at some of the big names that were the darlings of 2020, like
Right.
Nvidia,
It's a lot like
those,
that.
yeah, those are looking, yeah, again, like very, very big downtrends, and not on the relative strength, not on the relative strength screens right now.
Yeah, exactly. We also want to take a quick look at XLV. This is the Spider Healthcare ETF. Had a strong week last week, up about 5%. A bit of a pause here today, but seems like we are seeing, outside of oil and gas, it's medical slash biotech, some solar stocks, insurers that seem to be grabbing our attention.
Well, and contrast this with the IGV, the software, and the SMH, the
Yeah.
semiconductors. Look at how this came down in September and October, but it wasn't making new lows. The June lows at 118.75 held for the Spider Healthcare, and you've got your managed care, you've got all these different pockets of
Mm-hmm.
strength. So overall, what I like to look for is those stocks that aren't making new lows when the indexes are making new lows,
Mm-hmm.
because that tells me, hey, there's a divergence of strength here, and I always want to go where that strength is.
All right, well, let's take a look at three stocks that are examples of the sectors or some of the sectors that you have your eye on, Justin. Starting off with Pure Storage. So, this is in the data storage group, up 1.1% today. Seeing a number of blue volume spikes here on the daily chart. Maybe not quite so on the weekly, but the action appears to be pretty constructive, Justin.
Yeah, so far so good. And again, I just bashed tech, right? And here I am with a tech stock. But look at how different this tech stock looks compared to IGV and
Yeah.
SMH, or the Nasdaq, even, or any of the indexes. This is one where, again, that September October low held above the May June low in Pure Storage, and we got a nice little base here, and this base, sure, it's deep in terms of being, almost 19-20%, but overall, it's not too bad when you consider that stocks usually correct, a lot more than the indexes. This one has held up pretty well, and yes, it did get below its 200-day moving average line and its 50-day, but it's above it now. That relative strength line is hitting new highs. You see a kind of blue dot on the daily chart. So there's a lot of things that are going for this, and there's some stuff on the fundamental side. This has a triple digit quarter gain for the earnings last quarter, and some pretty decent revenue numbers. So I think that's worth considering. And Brian Deegan just wrote a really great stock of the day article on this on Friday, so I think that's worth checking out. Sure, there is the whole metaverse idea, and even though Meta Platforms got killed last week after its earnings report, a lot of the beneficiaries of spending in the metaverse that Meta Platforms is doing, they were seeing gains last week, and Pure Storage is certainly one of those in that area that could be benefiting from metaverse spending. I mean, they've
Hmm.
got 56% of the Fortune 500 companies listed as a client, so it's not just that they're dependent on Facebook. They've got some big names in there.
Right. And I am seeing, I don't know how liquid it is after hours, but it is indicated higher after hours. Any sense of why that might be? Could it be moving in sympathy on earnings, or how should we interpret that?
You know what? I'm not seeing that myself
Okay.
right now, but sometimes you have to be careful. Like in after hours,
Yeah.
there can be like a single trade that is just 100
Skewing
shares and it can
things.
throw
Yeah.
things. But right now, I'm not seeing that. It should have earnings coming up soon, but I'm not quite sure when. I don't think that
Not
they've announced
confirmed
yet.
yet.
Yeah,
Yeah.
not confirmed. Hmm?
Okay. Well, we will keep tabs on it. And next on our list, we want to be taking a look at RJF, Raymond James. This is in the investment banker broker group. A really strong reaction to the earnings report last week. For the week, it gained 18%, and now it's trying to go really tight here, Justin.
Yeah. So first of all, it's extended. Right now, this isn't the time that you want to be jumping in, but this is a time to be watching, right?
Mm-hmm.
Seeing what stocks are the ones that are setting up, the ones that are having the most strength. And I think that there's a number in the financial area that do look interesting, specifically this investment bank and brokers group. We kind of went through some of those at the end of the IBD live show today. But this one has some really strong volume coming in. Granted, a lot of that was around earnings, but a really strong move behind it too. And this is after it was doing a pretty nice consolidation in that handle. I mean, if you consider that the handle was about a 13% depth, and again, I'm not coming up with these numbers off the top of my head. It's just real easy to roll over any of
Mm-hmm.
these consolidation patterns on MarketSmith and use the pattern recognition to do the calculations for you. So I like when something has a deeper cup and then it's able to tighten up. That handle is not down as far, so a 26% depth, only 13% depth in the handle. And now if we can just kind of hold up here, because whenever a stock makes strong gains and is able to hold it, that tells me that investors are comfortable with it being at this higher price, this higher valuation. And a lot of times what happens is you get a consolidation,
Mm-hmm.
and then it's able to make another move as
Right.
more and more people are comfortable with it at that price. They start kicking the tires on it a little bit more, and those institutions, right, they're not just buying once, they're buying multiple times. So they're looking at
Mm-hmm.
these pullbacks as opportunities to get more stock.
Right. And clearly, investors liked the earnings report. We did see a slight decline in the bottom line, but it looks like forward looking estimates are pretty strong.
Yes, that is one thing that for a lot of companies out there with some of the best looking strength in their charts, you look at the fundamentals and they're a little bit lacking. If not the recent quarters, showing some negative growth, but sometimes you're looking at the estimates and the estimates are not looking so great. So that's something that is going to be a little bit tricky. Especially
Mm-hmm.
if those recession fears that many people have come to pass. But right now I'm kind of relying a little bit more on the technical action
Yeah.
as looking forward a little bit more than maybe
Right.
what the macroeconomic outlook is.
All right. And last but not least, let's talk about ACGL. This is an insurer, and we also saw a strong week last week in reaction to earnings, up 17.5%. It started the week off with another gain here, about 1.5%. So it's continuing to move higher, Justin. But this is another one that you're looking for it to pause here to set up again.
Right. I don't want to chase stocks like this. And here again, we've got a lot of volume coming into this, and it makes sense because guess what? Twitter, that's no longer traded. That dropped from the S&P 500. Something had to take its place, and that's going to be Arch Capital. So a lot of people are needing to put this in their portfolios because they're index funds that are matching the S&P 500. So that does create a lot of buying. But
Mm-hmm.
it's not just that's going on here. And I'm just going to go ahead and switch gears real quick and let's take a look at Kinsale, which is KNSL, because that also had a big move. So
Yeah.
you've got a number of these insurers that have been setting up and looking strong. So, again, granted, I know that a lot of this volume is from that S&P 500 news, but you have that in Kinsale too. So there is this kind of growth going on in the in the insurance area. not typically a huge growth area that we get excited about. But
Right.
go to the weekly chart on this, and you can see that um, you know this has been able to make moves in the past. And
Hmm.
if we are still in kind of a environment where we may be going back and forth, for some people, hiding in the insurance names is
Yeah.
is is what they do. So um,
Right.
I just thought it was interesting.
Yeah.
Again, just an area to be looking at when you're looking for
Hmm.
strength.
Yeah, and it was also the first quarter, and it had four top line declines, and then started picking back up again, and also volume to the upside. There was some accumulation in this stock
Yeah.
leading up to last week with that big promotion to the S&P 500.
Yeah, I'm always very curious, when I see very heavy volume coming into things. That usually I can't tell you how many times I've seen it where the volume comes in and you don't find out why until later. So that's just another example of hey, somebody knows something, the market
Yeah.
knows something, but people are buying, and
Mhm.
that usually does precede some very large moves when you see
Yes.
that volume start spiking like that.
Hmm. All right. Well, we'll keep an eye on it. Thank you so much, Justin. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. So make sure you tune in investors.com/IBD Live for all the details. We'll see you there. We'll also see you right back here tomorrow at the close.